Holmes here from Bull Goodly. I just wanted to take a few moments and talk with you about why a marketing agency performs financial audits. A part of our research, audit, and strategy phase that we offer all of our clients is a full financial audit. Now, you may think this seems a little outside the realm of a marketing agency, but everything we're doing is with your end game in mind. This means to make you more pre-tax profit and increase your bottom line. And however will we know if we're getting there if we haven't reviewed financials with you? Financials are important to the marketing strategy in a couple of different ways. For example, does your budget allow for an outsourced marketing team? The Small Business Association states that businesses making less than $1 million a year should be spending approximately 10% of their revenue on marketing. Your marketing budget will be one of the first things our sales representatives will discuss with you, because if you haven't made room in the budget for marketing, or you don't have enough to really make an impact, we really won't be able to do our best work and show you the results you came to us for. Now, is your business in a sound financial place to grow with the marketing campaigns? Another question to consider, or thing to consider, is that if we do our job, ideally your company will scale. We intend to bring you as much business as possible to meet the goals that you've brought to us. But if you're not in a financial position to grow your business, i.e., can you hire more employees, increase your expenses as needed to fulfill all of your new clients, etc., then what's the point in putting forth a full marketing strategy? Another question to consider is, we have a few different marketing KPIs, or key performance indicators, that we look at that tie directly to a client's finances. Some of those KPIs that we look at are lifetime customer value, cost of acquisition, return on marketing spend, return on ad spend. Now, let's dive a little deeper into what each of these are. Lifetime customer value. Now, lifetime customer value is a really, really good indicator of long-term marketing efforts and how much you're getting paid on the back end. So, if you know that a client pays an average of $50 a month, of which $5 is profit, and they stay with you on average of 2 years, you know your lifetime customer value is $120, or 24 months times $5 a month. Now, this is important because it tells you that it's actually worth it if you spend $50 on a Facebook ad to generate you one customer, because you will generate $70 in profit, 120 minus 50. But this also tells you that you need cash flow to cover your costs for 10 months before you start to generate a profit. $5 a month times 10 months is $50, which was the cost of your ad. Now, cost of acquisition. Cost of acquisition can be factored multiple ways. You can look at a specific campaign, or you can look at the big picture of all marketing and advertising costs over time, such as time spent, collateral, ad spend, etc. Now, we are ultimately looking at all of the costs associated with acquiring a new client. Now, here are some of the questions that you may ask. How much are you spending on advertising? How much time are you actually spending, and what's that time worth to close the deal? How much are you spending on outsourced marketing? What are you spending on sales and marketing team salaries? Now, once you've answered these questions, you can complete the formula and come up with your cost of acquisition. Now, it's really kind of easy. You basically take your total cost of sales and marketing and divide it by the number of customers acquired in that same time period. Now, knowing your cost of acquisition and lifetime customer value can help you with long-term planning and budgeting. If you know how much it costs to acquire clients and what that client is worth, you can calculate the number of cash, or the amount of cash reserves you need to keep in order to continue your marketing efforts. Now, return on marketing spend is calculating all of the money that you're spending on marketing as a whole. So this goes beyond campaign-specific cost of acquisition. This could include the cost of marketing, your marketing team, your print collateral, direct ad spend, sales team, networking, conventions attended, and the list goes on and on ad infinitum. This is a broader big picture KPI to see if you're getting a return on your overall marketing efforts. Now, return on ad spend is very, very similar. Similarly to return on marketing spend, return on ad spend is a broader perspective of the return specifically on your marketing efforts based solely on your ad spend. Now, you might add up all of your ad spend from social media, Google ads, print ads, or you might calculate each separately to see if your return is coming from a specific channel. There's no really industry standard for this KPI. It's really going to depend on your industry and your client base, and really how much you can spend on your ads. Now, I know this is a lot of information to digest, and you would be more than happy to sit down, jump on a phone call, or answer any questions on social media or on our website. Also, would be more than happy to offer a free initial consult to see if a financial audit might be beneficial to your organization.